I'm Simon Taylor, I'm CEO of Melton Building Society. I've been at the society for 5 years. Prior to that, I've worked at 2 other societies, and prior to that, worked in retail banking. The Melton is a fast-growing building society. We're celebrating our 150th year this year, so we've been around some time. We look to support across a wide range of the mortgage market, so we've got quite a breadth of proposition, and we also have a development finance proposition that helps developers build houses across the UK. The current economic climate is challenging. I think it's very difficult to understand where things are going. Our rates going up, our rates going down. What's the true effect of some of the actions that we're seeing in the US and across the world? Also, the cost of living crisis coming through. I think we're starting to see a reduction in graduate recruitment, and some of the employment numbers are starting to trend on an upward direction. All of that is challenging for a mortgage lender. I think as a mortgage lender, what we've tried to do is really understand what our customers want and try and adapt our products and offer a wider range of products, whether that's credit repair for people who are struggling with their credit file, or whether that's first-time buyers, or whether that's people who are looking to build a home, their dream home, through a self-build product. So I think it's just trying to be really balanced and look at what the customer or the member's looking to try and achieve. I think the mortgage market is going to change quite fundamentally over the next 10 years. If you look at the work that's been done on digitising the home buying process, if you're not clear or being able to operate in an open environment with API-driven technology, then you are going to be at disadvantage. I think building societies obviously are owned by their members, so can take a longer-term view on the investment that they're trying to make. I think building societies will, in the majority, pivot towards niches, because I think they will use their data and their insight in a different way. So I think the ability for low LTV residential lending, the ability to price for that is quite tricky if you're a smaller lender. I think that lending will go through to a handful of lenders who will have the scale to be able to do that. So I think where building societies will come into their own is really working data and really understanding those niches, such as self-build or credit repair or shared ownership, really working those niches to understand and bring value. I think also within the mortgage market, as AI and the artificial intelligence starts to be used more widely, I think that will be very disruptive, especially to the broker aspect of the market. I think brokers, as a pretty much a wholly intermediated market, I think the advent of AI and machine learning is going to fundamentally change the role of the broker.